We are delighted to welcome public service staff and educators of the Western Cape Education Department across the Western Cape. You have dedicated 10, 20, 30 and 40 years of continuous service to build our communities, province and indeed our nation. For this, we say, thank you. Retirement refers to the time of life when one chooses to permanently leave the workforce behind. The 5 stages of retirement that everyone will go through are: 1. Pre-retirement, this is the planning stage. 2. Full retirement, this is the honeymoon stage. 3. Disenchantment. 4. Reorientation, redefining me. 5. Reconciliation and stability. Retirement has been described by many as the start of a new and exciting journey, adventures to distant shores, fun in the sun, bucket lists revisited with the view towards making all of them happen. All this is true, but it involves careful planning. It is for this reason that the Directorate Service Benefits is hosting this information session and invited 3 key stakeholders, namely, the Government Employees Pension Fund, GEPF, the Government Employees Medical Scheme, GEMS, and our employee health and wellness provider, Metropolitan Health, to share information with you and answer the many questions you have on retirement. Thank you.
A very good afternoon to all of our public service staff and educators. I am Debbie Pillay, and I want to bid you a warm welcome to the Service Benefits Annual Retirement Information Session. Planning for, during, and after retirement remains the only way to ensure that this change in the road is smooth and free of anxiety and worry. Today, we will start the conversation by sharing a few facts with you about retirement, and this will come from our team Service Benefits. This will be followed by our Metropolitan Health partner, Lesego, ably followed by our expert from the GEPF, Amelia Hudsenberg, and we will conclude with the presentations with our partner from GEMS. And today it will likely to be Bongani who will be presenting on behalf of GEMS. The mics will be closed for the duration of the presentations, but you are welcome to place your questions in the chat, and the responses will be shared on the chat as well. We will open up the mics for the Q&A session, which will be facilitated by myself, before we move to a vote of thanks and closure. Just for your information, the presentations from GEMS and Metropolitan Health will be shared with all attendees, and the information from the GEPF is available on their website. Around 5:45 this evening, a link will be posted on the chat asking you for your feedback on this session, and we would really appreciate it if you could share your thoughts with us. I thank you in anticipation of those inputs. So let us move and get this conversation started. I trust you will find this session very useful and that you will leave having answered all of your questions that you have come through to listen to during this information session. Thank you.
Let's look at the ages at which one can retire. Educators may retire early between the ages of 50 to 54. However, you must have 10 continuous years of pensionable service and have started before the 1st of May 1996. The 50 to 54 early retirement age category is applicable to educators and not public service staff. Educators and public service staff may also retire early between the ages of 55 to 59. There are no special conditions for this group. 60 to 64 is the normal retirement age for both educators and public service staff. The compulsory retirement age for both educators and public service staff is 65. The last day in service will be the last day of the month in which you turn 65. Compulsory retirees are identified by the WCED, and our office will send the retirement letter to your school or office at least 3 to 6 months prior to your retirement date. In order to start the retirement process, you must notify your supervisor at least 3 months before your intended date of retirement. All supporting pension forms and documents must not be older than 6 months. What other benefits are retirees entitled to? 1. A pro rata bonus is payable if applicable. For example, if your bonus month is July, and your retirement date is the 31st of December, a pro rata bonus for the period July to December is payable. 2. Savings that were diverted to the ILSF will be paid out to you. You must, however, be enrolled. 3. Any leave credits, if applicable, will be audited and paid out to you. Leave credits include the capped leave credits as well as the current leave credits applicable to the public service staff. Only written requests for pension quotations from you as the member can be submitted to the WCED offices via the call and walk-in center. Alternatively, pension benefits can be viewed on the GPS app, which is available via the Apple App Store and Google Play. The WCED has 30 days after the date of exit to finalize on all payments. For example, should your exit date be the 31st of December of a particular year, the WCED must finalize on the payment of the pro rata bonus. The ILSF savings and leave gratuity by the 31st of January of the following year. Thereafter, only if the client has submitted an accurate set of documents, will the WCED submit to the GEPF for processing. Any pension queries may be lodged via these 2 email addresses: WST Call Center at Western Cape, gov.za, or WST Walk-in Center at Western Cape, gov.za. Thank you.
Thank you all very much for listening. Please note your questions either in the chat or for the Q&A at the end of the session. Lesego, I am going to unshare and hand over the baton to you.
Good afternoon, everyone. Thank you so much for giving us an opportunity to be part of this beautiful journey that we all know that has a lot of questions for a lot of people. We're trusting that throughout the session, you'll be able to get a lot of answers that you might currently be having, or a lot of questions that might start popping up as we go through these different benefits that you need to start applying yourself through. Very important to note that the Metropolitan Wellness Program benefits that you currently have within Western Cape Education is very highly confidential. So under no circumstances do we ever share any part of your engagement with our professional team with anyone. And I think this is vital for anybody to know that when they engage with the team, that the information that they are sharing or the questions and queries and the services that they are requesting for remains confidential within our professional network. Why do we have this program in place? Why does WCED partner up with Metropolitan? This is a very practical tool. It's a very practical benefit, which basically looks into an individual understanding that as a person, you will have things that are going to impact you on a personal level. And unfortunately, we are not machines. We cannot isolate the things that we go through on a personal level and leave them at home and say, now I'm going to work. It is almost impossible for one to be able to separate those 2 ventures. And why this program would be of a benefit is that when you do find yourself in a phase like that, or when you find yourself going through personal challenges, at least with the wellness program, you have guaranteed a team of professionals that will be able to assist you. Very important to note that the services are very short-term orientated. So all the services and all the benefits within the program are very short-term focused. They are very preventative and they are proactive. So why we say that is because you know yourself better than anyone. And at this time, you you would probably now would need to actually go and find out who you are as an individual. This is where you actually need to go and have a board meeting with yourself and find out, I have given myself 20, 30, 40 years being an educator, being an officer, being an administrator. Now, who am I? So why we're saying that it's proactive is because you are able to go and unpack yourself on at an individual level, and we are able to align with you to help you to achieve and oversee some of the shortfalls that you might be having. Before retirement, and this is very important for everyone to take note, that these services are all available to you and your immediate household members before retirement. So you've got the psychosocial counseling where you've got 1 to 6 face-to-face consultations. So when you call through your dedicated toll-free number, and in the event whereby as you go through a clinical assessment, we pick up that unfortunately what we're engaging on is not something that can be concluded only through telephonic consultation, you will then be referred for face-to-face consultation. Your face-to-face consultation would be according to your preference. Do you want it close to work or do you want it close to home? We also do render up sessions into the weekend or a Saturday, or even after hours around 8 o'clock, 1800 being the latest, where you are able to actually go and see a counselor. You also have 24/7 trauma support line in the event whereby you are faced with any traumatic incidents. This could be loss in the household, experiencing a hijacking, or being exposed to a very traumatic incident. You're seeing somebody being exposed to gangrism, or somebody being shot, anything that is related to trauma. You've got a 24/7 support line where you'll be contained, and thereafter, if the trauma is very, very severe, you will then be referred for face-to-face for that. Then you've got the legal services. Very important to note that the legal services and the financial services, they do not have any face-to-face consultation. All of the services between these two benefits are being done via telephonic, via email. Very important to note, the legal team and the financial team within the MH team, they work very, very close together. Okay, and why you will find that being the case is because if we find that a lot of the cases within the financial team, they'll always overlap into the legal team, whereby there's either a query that needs a legal input, or it needs even a court appearance. Now, all of that work will be done with the team on our side with your approval. All approvals will be done electronically. All approvals will be done via recorded calls. So you should be assured that everything that we will be advising and guiding you on will always be given based on your consent. So we do not do any decision making from the legal team to the financial team without your consent. Then we've got the family care, which works very well for individuals that have got a big household, where you find that you're staying with your grandkids, you're staying with your kids, you're staying with your partner, and there's services such as you want to know the closest center where you can get a rehab, or you would need advice and guidance on a second opinion of a doctor. So the family care is for such services to help you with other inputs that you might need, or questions that you might have that are relating to your external household members. Then you've got the Hello Doctor medical support. I think this is one of the most beautiful benefits over and above all of these services, because here then we start tapping into your physical well-being. Now, when you're preparing now to go into retirement, one of the things that we've picked up is that individuals don't actually look into the opportunity of saving for medical aid. So you would have saved for everything else, but you would not actually have catered for medical aid. Now, Hello Doctor is a nice benefit to have, whereby it actually helps you to manage your doctor's consultation. So you don't find yourself constantly consulting, even for things whereby you could have received a proper guidance on the diagnosis. It's also there to help individuals that are addicted to over-the-counter or self-diagnosis. So here you will have a USSD that you will send through to the medical team, and they'd be able to engage with you with anything that is medically related. It could be that I'm not feeling so well, or I've had my blood pressure and it's very high. I'm not on medication. Should I go and actually go for another checkup? Or I'm having these headaches and I'm not sure, is it something that is chronic now, or do I need a second opinion because the doctor did diagnose me? The medical team would be able to help you. So these are doctors on call, professional medical team that is available 24/7. So the Hello Doctor services are also available 24/7. Very important to also note that the Hello Doctor and the call center team and the trauma team, they are available in all official 11 languages, and they are available 24/7, 365. The debt restructuring support is usually being put in place for instances whereby we find individuals that are over-indebted, beyond over-indebted, and are at risk, especially when you are now starting to prepare to go into retirement, and then you find that unfortunately you still have a lot of debts that you still need to consider on, and unfortunately that might actually have a huge impact when it comes to the savings that is going to come out of your pension fund. What are the financial services that are available? So you can discuss the following with the team: from debt reviewing, loans that you might have taken out. We do not give out any loans. We give guidance. We give proper review on the contracts that you might have signed with regards to your loans. We give guidance on your savings, retirement, and your garnish orders. From a legal perspective, anything that has to do with family problems, civil matters, money and credit related matters, drawing a credit report, domestic, standard lease, sales agreements, acknowledgement of debt, and last will and testament. Out of this, as you are preparing for retirement, I think the ones that actually really stand out is you being able to request for a credit report now. Credit report being able to identify exactly what is the financial world currently saying about you. You might be under the impression that I pay all my debts, I don't owe anyone, and all my accounts are up to date. But when you come and look into the financial institutions, they might have still have listed you, or they might have instituted additional credits on the loans or the credits that you would have taken with them. So the team is able to review your credit report and give you guidance and advice on how to actually get your credit score correct again, or actually how to clean it up if you have paid off all your debts. Wills and estates, very important. Your circumstances are going to be changing. There's a lot of change that is going to apply from your financial commitments to you as an individual. Very important for you to actually reflect as an individual now to see that, okay, I had 3 kids, or I had 2 kids, or I had 4 people on my will. Are these people still applicable? Do they still need to be on my will? When it comes to the allocations that you have done, is it still necessary for them to get those allocations that you have done when it comes to your savings and anything that is monetary related that you would have actually assigned on? So your wills and estates would automatically now become one of the assignments that you institute as you go through and you have that board meeting with yourself. And that is the same with your credit report. These are the things that you're going to start having a discussion on to view. Am I still over indebted? Where am I currently now with anything else? Can I still go and commit myself to any other debt? And this is where the financial team and the legal team would take your hand and help you to review where you currently are and guide you independently. So other thing that I need you to take out of this is that the team that is working with you from your wellness program, they are impartial. They do not work for anybody. They are an independent team that is not contracted to any association of your different they don't necessarily only work for MH or the MH financial institution or Old Mutual or Sanlam. No, they're an independent team. So what they're going to be doing when they work on your finances is giving you a holistic view and giving you an impartial input. Why is retirement so stressful? So from a psychosocial perspective, we have picked up that the common challenges of retirement include struggling to switch off from work mode and relaxing. especially in the early weeks of the months of retirement. Some individuals, this actually kicks in even earlier than that. Already now, because we're speaking retirement and you're starting to, and you've entered this workshop, you're already starting to have that mode of saying, okay, now what is going to happen? Okay, so you're starting already to have your mind racing with a lot of different questions, feeling anxious and at having more time on your hands, but less money to spend. So hence why it is so important to understand where you currently standing with your finances and being truthful about your financial commitments. Not forgetting, of course, I think if there's anything that we always underestimate is the importance of self-care when it comes to when you're doing those financial goals. Is that what is it for you? Is there a budget that you're also setting aside that can actually speak to you, that is aligned into looking after you, where you can time out and relax? Finding it difficult to fill extra hours you have with meaningful activities? Why now it is important to go and find out who you are is so that you can go and identify what are your dreams, what are your inspirations, what is it that you want to achieve now, because this is now the new you. This is where a new journey is starting for you as an individual. Okay, where do you want to go? What is it that you wanna that you would have wished you would have done a couple of years back that you now have enough time to actually now start investing in? Feeling isolated without social interactions of being around co-workers. Right now, you're an employee at WCED. The minute you step out, you're gonna be an individual that is now going to be on their own. And we picked up that when you've worked for an organization for more than 10, 20, 30 years, you already have a brand that you can associate yourself with. And it becomes very difficult for individuals to switch off and start now reflecting on themselves as individuals, independently now being part of the new society of just working independently on themselves. Experiencing a decline in how useful and important or self-confident you can feel, adjusting to a routine or maintaining your independence. Now you are at home with your spouse during the day or staying with your grandchildren. This is also a good opportunity for you to start reflecting on a healthy relationship. A healthy relationship with your kids, a healthy relationship with your partner, a healthy relationship with yourself. And these are the benefits as well that you can add on as you are now making your wish list, as you are doing a reflection check to say, in as much as now I've entered this new journey, these are the things that are making me uncomfortable. However, these are the benefits of them being in place. Some retirees even feel guilty about receiving money from a pension without directly working for it. So individuals that have not actually planned properly might find themselves either now falling into a trap of overspending, or individuals find themselves having to not have a proper structure, a financial structure to actually assign a monthly income so that it can still flow as if they were still part of an organization. Adjusting to retirement tips, embrace change. As we grow older, life can seem to change at every quickening rate. Kids leave home, you lose friends and loved ones, physical and health challenges mount, and retirement looms. So it is normal to respond to these changes with an array of mixed and often conflicting emotions. So what do we say? We're saying that go through the process and acknowledge, but more than anything, acknowledging it is you being able to reflect and then accepting. Change your attitude to it's not retirement, but it's a new journey. I am not unemployed, but I am now self-employed. I'm going to go and self-empower myself. I'm going to go and find where else I can contribute and enhance and increase my capabilities as an individual. Okay, acknowledge your emotions. And this is the very important thing. There's no right or wrong way to respond when dealing with a major life change, because this is a life changing. You are not going to be working anymore. You are not going to be one of the individuals that belong to an organization. Okay, it is okay for you to feel that way. but it is also okay for you to celebrate that you were part of that journey, that you actually contributed to that journey, and you should actually embrace it. Okay. So don't try to bully yourself into feeling a certain way about retirement. Allow all your emotions to go through. If you're feeling sad, if you're feeling frustrated, if you're feeling confused, allow them to go through, but do not get stuck into them. It is at this moment when all these emotions are starting to work on you that you should actually now start reaching out to the team so that we can help you to build structure, to analyze where it is that you would actually want to see certain things to go, or where it is that you would envision yourself to be in the next 10, 20 years to come. Adjusting to retirement, we're saying it continues years to accept the things that you can't change. Okay, railing against events that you have no control over can be exhausting, and it will be, because it will just make you keep on saying, what if, where else you could be actually starting to focusing on building yourself again. Redefine your identity. So go and find out who are you. You usually find people when they're very angry, they'll slash out and say, do you know who I am? But the question is that, do you know who you are? And this new journey allows you now to go and find out, who are you as an individual? Who do you want to be in the next 20 years? You've already set a brand within Western Cape Education. Now it is time for you to go and define a new brand of you. Set new goals. And most definitely, when you have set new goals, you've got something new to look forward to. You've got something else that is going to make you want to wake up in the morning to achieve again. Okay. Find your purpose and meaning. So what we're saying is that there are many things that you can still look into. Find part-time work after retirement within Western Cape Education if you are still in a space and in an opportunity to continue doing so. Volunteer your skills. Volunteer your skills. I mean, 20, 30 years being within this profession, that is a very, very, very unique skill. And a skill that will never dilute itself. It's forever there. So find out how else you can go and expand your knowledge and go and share it with the new upcoming generation that is going to go through your footprint. Not your hobbies and interests. Learn something new. Learn something new, and how you're going to pick up and know what to do and how to do it is when you go and have that meeting with yourself, when you engage with our team so that we can help you to set new goals, to set structure, to start identifying how you are going to now setting a new path for yourself. Adopt a relaxation practice, regular practicing relaxation, okay? Take a walk at the beach, wake up in the morning and meditate. Wake up in the morning and just breathe. These are things that are going to help you, not only on a physical perspective, but also on an emotional perspective. Get active, okay? We are constantly stuck within traffic. We work from 7:30 until 4 o'clock. We never really have time to get active that much. But this is a time where you really need to get active, where you can really now start building a new routine for your physical well-being. Practice gratitude. Be grateful that you have shared a part of you with not only our kids, with us. It all starts with you. For us to be able to sit behind desk and be in offices and be in our different professionals is because you actually contributed to us to be able to have these skills that we have. For us to grow in the manner that we are, is because of you have set that journey. So be grateful. We are grateful that we have teachers. We are grateful for department as education, because this is where the foundation of the nation stands. Break the worry habit. Okay, do not worry so much. Chronic worrying is a mental habit that can learn how to break. By challenging your anxiousness thoughts and learning to accept uncertainty in life, you can calm your anxious mind. So how do you do that? You get active, you practice gratitude, and you adapt to relaxation practices. Spend time in nature. Okay, spend time in nature. Go to the beach, go to the mountain, visit different places. Interact with different cultures in different provinces. Travel also really helps when it comes to relaxing and engaging and interacting with different people. Okay, don't forget that the Hello Doctor is available there to help you with your with your physical questions, any physical wellness that you might have. It will also help you to give you a proper guidance if you have any chronic conditions, all right? And now you need to make a decision on the medical aid that you need to continue with. What are you going to still need a very comprehensive medical aid because of your current medical condition, or can you actually downsize to a certain medical aid because your your current medical condition, it's not so extensive? With that being said, behind every child who believes in themselves is a teacher who believes in themselves. So thank you for sharing a part of you with us. Thank you for sharing a part of you with our kids. Thank you, thank you, thank you. And I trust that you're going to have a beautiful journey ahead. Thank you.
Thank you, Lesego, for a really enlightening presentation, especially in terms of wellness during retirement, but also what we can do in preparation for that phase. A really inspiring and motivational presentation. Thank you very much.
Thank you.
Amelia, I'm now going to hand over to you so you can proceed. Amelia Hutzenberg, ladies and gentlemen, from the GEPF.
Good afternoon, everybody, and a warm welcome from myself, Amelia, and the GEPF. While I'm waiting for this computer to do its thing, do you know how important this is, what we are doing today? I am so, so blessed to be part of this big step of your life. And as the lady said previously, this is the beginning of a new era, and I'm so, so happy for you guys. I'm not going to give away my age, but I am close to retirement, and I wish that everybody in the government sector gets this opportunity to prepare themselves fully to make an informed decision. Devi? Do you see my presentation?
We do indeed. Thanks, Amelia.
Wonderful. So let's do the first presentation. Oh, it skipped a few slides. I'm so sorry about that. What is going on? It skips from 1 to 7. Can you believe it? Okay, let's start. This is the history of the GEPF. Everybody knows that the GEPF was established on the 1st of May 1996. There may be people out there of the listeners that joined up with the GEPF prior to the 1st of the 5th, 1996. So you could have belonged to the GSPF. You could have belonged to the temporary fund. But at the end of the day, what happened on the 1st of May 1996, all the government institutions in South Africa under the new regime became the GEPF. Now, I don't want to brag, because I'm working for the GEPF. Did you know that the GEPF is the largest fund in Africa? It's the 3rd largest fund in the world. And if you're like me, a bookermans, you will know that our latest financial disclosure said this fund was 107% funded, which means somebody's doing something right. And I work for the company called GPAA, Government Pension Administration Agency. Our main job and our mandate is to give our members and pensioners peace of mind after retirement. There's normally a lot of stories going around, rumors going around. Ooh, I must take my money because somebody's going to take it. Did you hear that already? You know what? Our main job is to make sure that your money remains safe. You get what the JEP law is saying. And at the end of the day, we give you what we promised. Let's move on to section or the 3rd slide. why do you belong to the GEPF? Do you know? Your conditions of service determine. So if you work under the Public Service Act, you have to belong to the GEPF. Then obviously I'm working, I mustn't forget the audience is WCED, and obviously we work with the WCED or Educators Act as well. Now, when we look at the setup of the GEPF itself, I normally think of 3 legs. The one leg is the actual GEPF. That is where the contributions goes to on a monthly basis. That's 7.5 that you contribute as a member, and the 13% the employer contributes. Now the GEPF is governed by the JEP law and the JEP law only. And I normally say the GEPF is an entity on its own. It's the only fund in South Africa that is governed by its own law and not by the Pension Fund Act. Just an example. If the Pension Fund Act changes a law to say, as from tomorrow onwards, when you resign, you will only get the X percentage, that will influence all the funds in South Africa, except for the GEPF, unless they change their own rules to be in line with the Pension Fund Act. Isn't that grand, people? I just love that fact of the GEPF. Now, active members of the GEPF end their membership when they leave the government service. For example, when they resign, or they are discharged, or the unfortunate event of death. People who retire with the GEPF eventually becomes pensioners. So in other words, you still remain a member of the fund, but the membership is just changed from an active member to a well-deserved pensioner. Now, you will ask me, Devi explained it very, very nice to say that we want to educate members. And this is exactly what this campaign is all about. We want to reach out to our members, even if you are working in Timbuktu. You will never say that nobody contacted you. You were never informed of what you get and what the pros and the cons are. And this is the way we are reaching out, number one. We have to embrace technology. I know a lot of our older people, they will say, I don't do this technology stuff. But people, we have to embrace it. And that is why I'm so thankful for the 230 people that is logged on to this webinar. Let's move on. The campaign is to educate. And I love it. I just want to say, when I was in Sabi, and I know I'm giving my age away now, I always knew I want to be an educator one day. And you know what? The Lord knows best. I didn't become an educator. I would have been in jail today. You know what I'm talking about. The children of today is not the children of the 80s and the 90s. But I am still educating. And this is so important. We need to educate our members close to retirement. So when they have to make a decision, they make a decision what is right for them. Not right for the next person, right for you as an individual. We want to update your details on our record. So if we receive your exit documents, everything is hunky-dory. We are ready to pay. And we want to encourage our members to submit and to inform the education department that they are going to retire and to submit the forms timeously. What a big English word. I forgot to say that I'm actually Afrikaans. So, now, with every project or with every service we deliver, there's a few challenges we have to deal with. And one of the biggest challenge is the late submission of documentation. Whether it is the member's fault, member did not submit the documentation, whether it's the employer's fault or the system fault or whatever, this is one of the biggest problems why we cannot pay on time all the time. And if I tell you, you will never believe me. You may submit your documentation or you may inform your employer 6 months prior to your exit date that you are going to retire. Our system, the electronic exit system, allows the employer to upload retirements 3 months prior to your exit date. Now, why so early, Amelia? You know, I always say, we all are just human. We can make mistakes. But if it is submitted well before your exit date, there will be ample time to rectify errors in order to pay our pensioner on time. And we strive to pay our pensioners as per the JEP law. And the JEP law says we have to pay within 60 days after your exit date. But if you don't play the game along to allow your employer to submit in due time, then we as the GEPF, we cannot uphold our own JEP law. So please, people, I will to make a serious request that you inform your employer well in time, to give them enough time to process and to do their own internal processes. And the best part is, with the technology of today, there can be no more blame game to say, but I gave the forms to Amelia last week or last month, and it's not on the system yet. I don't know what they did with the forms. The electronic system, once your case is submitted or uploaded on PCM, the Pension Case Management System, and we are in receipt of your correct cell phone number, you will get an SMS to say, dear GPF member, we received your exit documentation and it is being processed. Peace of mind. I always say, if you don't know, you will never know whether your case has been submitted. But now you know you're supposed to get an SMS. While we're busy with this document processing, we must the administrators of the GEPF. And if there's anything wrong with that form, guess what? We will reject it back to the employer electronically, but you will be kept up to date. You will once again receive an SMS to inform you that your documentation has been rejected back to your employer. Then you are more than welcome to follow it up with your employer. So you will be kept up to date throughout the entire process. Let me just move on to the next slide. Now, this is very important. The GEPF is a defined benefit fund. What does it mean? For the Afrikaans people out there, the GEPF is a vaste voordelenfonds. It simply means that the GEPF pays out all benefits according set formulas, according to the rules of the fund. So you can't compare a resignation to a retirement, to a death, to a disability, because each and every type of exit has its own formulas that we use to calculate the benefit. So the first determining factor will obviously be your exit reason. So now we know which formula to use. Then the following determining factor will be your average pensionable salary. Okay, so a lot of people normally when they come to our office, they tell me, Amelia, but I think you used the wrong salary scale to do my calculation. We don't use your last salary scale upon exit when we do the calculation. We use your average pensionable salary of the last 2 years. In other words, 24 months. So for example, if I retire and my salary is on 350,000 Rand, the previous year I was on 300,000 Rand, and the year before that, it was on 250,000 Rand. Then your average salary will be And not 350, but plus minus 300,000 Rand. And that is what we use in the calculation for retirement. And then very important, pensionable years of service. I've learned that WCED is a different animal to all the other government institutions. Your pensionable salary can consist out of your normal years that you contributed to the fund. In other words, when you started to work at government, you started to contribute to the fund. But that is not the case for everybody. There will be maybe PDP periods, that is redress, that is where people were prohibited to belong to the GEPF. This is now under the old regime prior to 1994. And those years, if you applied in 2013, those years can be added to your actual pensionable years of service. And I've learned one special thing. A lot of my members don't know that they can purchase years to enhance their pensionable years of service. So there's quite a few years that can be taken in consideration when we look at your pensionable years of service, because all that can be added to make up your pensionable years. Let's move on. Now, I think this is the most important part of this presentation. What are the benefits when you retire from the GEPF? When you retire and you have less than 10 pensionable years, you will be paid out a lump sum, a gratuity equal to your actuarial value in the fund. So in other words, you'll get a once-off lump sum, and that is where your relationship will then stop with the GEPF. In cases like this, members may apply if you know, but I actually want a monthly pension. You may buy back service. That is why I've mentioned the purchase of service as well. So the consultation should start, please, not in the last month, not in the last few months prior to your exit date. Do it well in advance to inquire. Should you visit our walk-in center and you say, but listen here, I would like to do a purchase of service because I need 5 months, for example. We will do a purchase of service calculation for you, what it will cost. You can pay it off monthly, or it can be a once-off payment. We will also then do a calculation for you for your retirement age with the purchase of service, and another one without the purchase of service. In order for you to make an informed decision, will this amount that I actually pay for the purchase of service, I don't have another way to say it, will I benefit from this purchase of service? So I encourage you, do these inquiries if you played with this idea of, I don't want a lump sum only, but maybe I want a lump sum plus a monthly pension. Now, for those of you that have more than pensionable years, the rules of the fund determine that you will receive a gratuity and an annuity. That is basically just a lump sum and a monthly pension. Now, this calculation, according to the rules of the fund, is how we calculate your benefit. And you'll see it is very straightforward. The lump sum is calculated 6.72% times your average final salary times your pensionable years. The STD on this slide stands for standard. This is a standard option. And I'm going to explain now why I'm saying standard. The monthly pension is calculated 1/55 times your average salary times your pensionable service plus 360 Rand. This 360 Rand is given by Treasury as a parcella towards your monthly pension. And this is also the standard option. The portion in orange on the slide says that upon retirement, you may choose to enhance your spouse's pension. So in other words, should you die as a pensioner one day, On the standard option, if you go off on the standard option, then your surviving spouse will automatically get 50% of your monthly pension that you received as a pensioner. But if you decide upon retirement, I love my husband so much, no? I want him to get 75%. You may do so, but we will ask you, will you take a reduction upon retirement, A, on your lump sum, or B, on your monthly pension? So what will the reduction be? The reduction is linked to your spouse's date of birth. Okay? So that will determine what the reduction will be in A, your lump sum, or B, in your monthly pension. Now, what happens? Where do you get this information? When you complete your retirement forms, the retirement choice form will ask you standard option or enhanced option. Once your employer, the HR department, receives this and they start to upload your exit documents on PCM, this is now the pension case management system, which we do the exits on. They have to do a calculation for you or a quotation for you to indicate what will be the standard option number one, what will be the enhanced option where the lump sum is reduced, and what will be the enhanced option if your monthly pension is reduced. They will generate the quotation for you and they will provide you with a quotation. So now you have rand and cent in front of you in order to make this informed decision. There's a few things you need to keep in mind when you really go for the 75% or for the enhanced option. This option is irrevocable, okay? You can't come back over a year or two to say, but my spouse died, so I made provision for 75%. I want that reduction in money. I want it back now. You can't change it. That is the first thing you should know. Say, for instance, your spouse passed away before you, and after your spouse's death, you meet another love of your life and you get married. People, life goes on, eh? I know life goes on. That new spouse will not qualify for the 75% of spouse's pension because when you retired, we used the data of your spouse as on retirement to do the calculation for the enhanced pension. So that is what you should keep in mind. Number one, it's irrevocable. And number two, if you have a different spouse, and then upon your death, the new spouse, let's call it the new spouse, will receive a 50% and not a 75%. I hope that made sense because a lot of people normally lose us there. Now, what should you know about your monthly pension? I've explained now what the surviving spouse will get, but you are here. You are the most important person now. There's three things you should know about your monthly pension. Number one, your monthly pension, if you have more than 10 pensionable years upon retirement, your monthly pension is a lifelong pension. Did you hear what I said? It's a lifelong pension. The second thing you need to know about your monthly pension, every year, April month, your pension will increase. I've been with this institution for 15 years now, and like the Afrikaans person will say, klokslag. Every year, April month, our pensioners get their increase because how and when does the increase gets given through to the fund? When they have the budget speech in February and March. Sorry, opening of Parliament is in Feb and March is the budget speech. So once the budget speech is announced, then they will provide us with the details of the increase. And the fund has a track record of giving almost 100% CPIX increases for 10 consecutive years. Okay, there's just a few years that they gave 75%, and that is what the JEP law is saying. The increase that our pensioners get may not be less than 75% of the CPIX. Remember a few years ago? We did not get an increase. We that are still part of the working force, our pensioners got like the first year, 5.5% increase. The second year, 5.2% increase. I was so envious and I wished I was a pensioner then. But you know what? The JEP law determines which percentage, up to which percentage our pensioners must get. And that is absolutely fantastic. The last thing you need to know, the third thing you need to know about your monthly pension is that your pension is guaranteed for 5 years. Guaranteed for 5 years. So, Amelia, now you are talking me, dear Maka. You then first said it's a lifelong pension. And now all of a sudden you talk about the 5-year balance. No, or your pension is guaranteed for 5 years. It's confusing. Yes, I know. But I promise you, after today, you will understand. And it's normally very easy to explain this when I stand in front of a crowd or when I see the people. Then I normally do sketches and I use a bottle and I had to find a way to explain it to radio audiences and to Teams audiences. And I think I got it. Let me put it this way. Your monthly pension that we pay to you for the first 5 years is basically paid from your own contributions. Do you get me? Sorry about that. The first 5 years when you are on pension, we pay you from your own money that you contributed to the fund over the years that you worked for government. So by the 60th month, that money is depleted. Dis klaar, dis opala. Remember what I said? It's a lifelong pension. So we can't turn around to say, but you know what? Your money is actually klaar now. It's depleted. The pension is going to stop. No. Because the rules of the fund say it's a lifelong pension. The only thing that is going to change when you are over the 5 years, first 5 years of being a pensioner, is where the money comes from. So now we no longer pay you from your own money. The money comes from the GEPF's pockets, if I may put it in that way, for you to understand. So the pension will continue as if nothing changed. It's just where the money comes from, the investments of the fund, and you're no longer chowing your own money, okay? Your pension will still increase every year, April month. The only thing is, the difference is, should you die after being on pension for 5 years, there is no lump sums payable to your nominees. Say, for instance, you were a pensioner only for 3 years and you die within the first 5 years, which, so by the way, is guaranteed, eh? We paid you for year 1, we paid you for year 2, the monthly pension, and you die as a pensioner. Then in actual fact, there is still 3 years worth of pension within the GEPF that is not our money. It is your money, it's your contributions. So what does the rules of the fund say? The rules of the fund basically just say that that 3 years worth of money that's still with the fund must be paid out. It must be paid out. The question we should ask is to whom, number one, and how. The how is very important, and it's because people want to know. We will pay it out in a lump sum form to whoever my member nominated. So, ladies and gentlemen, do you hear what I just said? It will be paid according to your nomination form. So even if you are a pensioner and your personal circumstances changed, you still have to keep your nomination form up to date in order for the GEPF to pay out the right person. Okay? So that is very, very important. Number one, we will pay it out as a lump sum to your nominees. And number two is we will calculate the amount of money, the monthly pension that is still with the fund, and pay that out to the nominees in a lump sum form. I hope that is very, very clear, because a lot of people think that the money reverts back to the fund upon death of a pensioner if the pensioner was within the first 5 years of retirement. I hope I've made that very, very clear, because it's very important to understand that. Now, let's look at the other determining factor, taxation. Did you know that pensions only became taxable on the 1st of March 1998? So if you're one of those lucky people, or should I say those of the people that's closer to retirement age, and you should have pensionable years prior to March 1998, that tax rule still stands loud and clear. So for example, your pensionable date is 1990. Then 8 years of contributions will not be taxed. Isn't that grand? That is applicable on resignation as well as retirement. Now, when you resign, they will do the calculation. SARS will do the calculation, which is called Formula C, to determine the amount that accumulated before March 98. And they will put that aside because it cannot be taxed. Then step number 2 is SARS will give you a 25,000 Rand tax relief on your benefit, which cannot be taxed. And once they've done that, then the taxation is starting. They will tax you according to the tax tables of SARS, which starts from 18% to 36%. And I would love to make an example, if time allows me. When you resign, your benefit is 1 million Rand, right? Then SARS will look at this benefit and look at your pensionable date. Then they will see, oh, this person started in 1990. So we have to do Formula C to see which amount accumulated before March 98. They will do their Formula C, and for this example, let's say a 200,000 Rand accumulated before March 98. SARS will very politely put that money aside, and then now they will say, we're sitting with 800,000 Rand. How is this person exiting from employment? And this time around, the person is resigning. Right, now the SARS rules say this person must get an additional 25,000 Rand tax rebate. They put that aside. So in other words, just to recap, 225,000 Rand cannot be taxed according to the SARS rules. Now, they're sitting with 775,000 Rand. And now only the taxation starts according to the tax tables of SARS. Now, just bear with me. Let me just see. 25,001 Rand till 660,000 Rand will be taxed 18%. Okay, so the first leg, say the first 600,000 Rand, 18%. Then from 660,000 to 990,000 will be taxed 114,000 Rand plus 27%. And if you exceed 990,000 Rand, you will be taxed on the 990,000 Rand, 203,400 Rand plus a 36%. So that is one of the reasons when members ask us, Amelia, what tax am I going to pay? I'm not in a position to calculate your taxation amount because that is a function done by SARS and not by the GEPF. Let's use a very, very same amount upon retirement in order to see how different you are taxed upon resignation and retirement. The first leg will be, they will do the Formula C to see what accumulated before March 98. For this example, let's say it's another 200,000 Rand, the same 200,000 Rand. But this time around, because you are retiring and not resigning, SARS will give you a 500,000 Rand tax relief. So they will put that money also aside. Now, 700,000 Rand of your million Rand cannot be taxed. So SARS is still sitting with a 300,000 Rand. As my somme reg is. Then SARS will tax you. Once again, the first 500,000 Rand is 18%. The second 300,000 Rand is 27%. And then if there's a balance, 36%. So in other words, the tax man is softer on a person that is retiring than towards a person that is resigning. And I have to say the following. These rebates that you get, resignation 25,000 Rand, retirement 500,000 Rand, this is a once in a lifetime benefit that you get. So for those that resigned previously, they got the 25,000 Rand rebate and they came back to government and they resign again. Unfortunately, you are only entitled to this benefit once in a lifetime. Sure, people, we're almost there. 6 more slides, then we're done. This is what I call the $1 million question. A lot of people normally ask our consultants, what is the best? Should I resign or should I retire? Do you know that, first of all, we are not financial advisors, not at all. So I'm not at liberty to say, Devi, it's better to resign, you'll get more money. Or Devi, it's better to retire, you'll get a monthly pension. Because we are not carbon copies of each other. My needs and your needs are not the same. You, first of all, what you should do, if you get to this question, you should get calculations to see what is the Rand and cent on both resignation and retirement. Do your homework. Because upon resignation, you can take your money into your own account. You will be taxed immediately. Or you can transfer your money to an external fund without the money being taxed when we pay the money over to your choice of fund, right? So if it's R1 million, we will transfer the R1 million to your external fund. But what you should keep in mind is once you touch the money at the external fund, you will be taxed eventually. Whether you pay tax now, if you take the money now upon resignation, or whether you transfer your money to an external fund, once you touch the money, you pay tax. Hulle sê mos, gee die keiser wat hom toekom. So, tax gaan jy betaal, right? You should ask yourself, when I take this R1 million minus tax in my own account, how long will this money last? And this is not being rude, people. This is just reality. A lot of people think that R1 million is a lot of money. You know, back in the days when I was like 10 or 12 years old, there was a song, I can't remember who the guys that sang the song, but it was an Afrikaans song. Julle weet mos nou ek is Afrikaans. And this guy normally sang, ek sou kon doen met 'n miljoen. Okay, back in the days, maybe. But I personally, I won't be able to survive on a once off a month if I didn't plan for it. Because, I should ask myself off. If I consider resigning at retirement age, Amelia, do you have bond debt? Amelia, do you have car debt? And people, I was a late bloomer. I still have a 12-year-old. And I was so silly. I told myself I will go off on early retirement one day. And when I counted how old I will be when I'm 55, I realized my youngest will only be 18. So what starts at age 18? College money, university money, and. But you know what? That is my needs. I know that I want medical aid because I have chronic conditions and my medication costs an arm and a leg, and I hate queues. People, I've given you personal information of myself now. So if I have to make a choice one day, I want to keep my medical aid. And where will I get that? I won't get it when I resign. I will get it when I retire. And we will discuss the medical subsidy criteria later on. And I believe one of the other presenters will discuss it in depth. But this is my need. You should ask yourself, if I have R1 million after tax, I sit with 800,000 Rand. Shoo, I still have 300,000 Rand to pay my bond, my car, or I maybe want a new car. I don't know what your needs are. You know what your needs are. Okay? Then based on that, you make a decision. I still have a minor child. Should I pass on as a pensioner? My minor child can get a child's pension. I am married. I want my spouse to get a spouse's pension. So these are all the things you have to take in consideration when you make the decision, should you die or should you retire? I want to retain my funeral benefit, and I will only retain it upon retirement. And then obviously the medical subsidy. I always make a joke and say, that I said just now, I don't want to sit in queues. I hate queues. When I am sick one day, I don't want to go to a clinic to see a doctor. I don't want to go to a clinic to get my medication, because then you have to pack a picnic basket, reg of verkeerd. I want to pick up the phone and say, doctor, I don't feel well. I want to come and see you 10 o'clock. I said, reg so, And that is why I want to keep my medical aid. I still have children. And with all the things going around today, I want the best of the best. And but on the other side, we're not carbon copies. I'm going to tell you.
Amelia?
Yes, ma'am.
Sorry, you've got 5 minutes left.
Oh, thank you. There's two more slides. Right. Then medical subsidy. The qualifying criteria for medical subsidy, it is monthly medical subsidy. You must have at least 15 government service years. 15 government service years. Please take note, these years is not pensionable years, it's government service years. So in other words, it can be bits and pieces, different periods that you've worked at different government institutions. When we add everything together, if it's 15 years, you meet the first criteria. And for medical retirement, or in other words, disability, it's 10 years. Okay, so once again, it doesn't have to be consecutive years. And just for the record, when, say for instance, I've got 9 government years and I go off on retirement, I've reached compulsory retirement age, I've only got 9 years, I will get a lump sum from the GEPF because I've got less than 10 pensionable years, but I can still qualify for a monthly subsidy if you add all my government service years together, and it's more than 15 years. So in other words, it's possible for you to only get a lump sum from the GEPF But from the medical side, the subsidy side, you may qualify for a monthly subsidy. For those people that don't need the 10 years upon medical subsidy or the 15 years upon retirement, you may qualify for a once-off medical payment. Okay, so that is the criteria for the medical subsidy. Just 2 more slides. I've done that. That is basically what you'll get as a lump sum, and that is how it's determined. That is also determined by the DPSA. And then you have to contact, we've already said this, you have to contact your department at least 6 months prior to your exit date, and in order for them to do the internal process. Okay, so your HR will be responsible for the electronic Z102, and you have to complete the documentation. Let's look at the documentation. People, I promise you, this is the second last slide. Devi, thank you for the reminder. The Z102, it's the responsibility of WCED, HR department. The Z864 is to provide us with your current details, whether you're married, divorced, single, or have a life partner. Your Z894, this is a very important form which needs to be completed partially by your bank. Please, people, no mistakes are allowed in this form. No typics, no nothing. Blue pen, please. And the information or your name that is used on the Z894 must correspond with the Department of Home Affairs database. The spouse's pension choice form, we spoke about that earlier on, the 50 or 75%, and then your original certified copy of your smart card ID or your barcoded ID. What you should know about a copy of your smart card ID, back and front of the document must be on one page and certified. And something that I've learned, we looked at your signature on the smart card ID, and that signature must correspond with your signatures on all the other forms. Okay. We prefer that you provide us with a WP updated nomination form upon retirement. So should something happen to you within the first 5 years, we know we have the updated information. Second last will be your Z583. This is the application for your medical subsidy, whether it's the lump sum payment or the monthly subsidy. Lastly, the departmental liability claim form. This is a very important form because this form is normally completed once your financial clearance is done within the department, which is WCED. And this form is very important because you as a member, according to the JEP law, have to give permission to the GEPF whether we may or may not deduct departmental debt from your pension. The form is structured in such a way where you say, I refuse to that the GEPF deduct money from my benefit, or I give permission. So this is very important that the administration process takes place. In other words, the employer must consult with the employee about this debt, and the forms must be completed accordingly. If you have any other questions, you are more than welcome, and that has not been answered today, you are more than welcome to make use of number 1, our call center, number 2, our walk-in center here in Cape Town, or number 3, you may email the Western Cape.inquiries@jepa.gov.za. Remember, the GEPF is your fund and your future. And I thank you.
Thank you very much, Amelia. Once again, you have managed to capture the audience and keep us listening for more than 45 minutes. Thank you very much. With that, sorry, Amelia?
I said, wow, thank you.
So we are now going to move swiftly on to the GEMS presentation to Bongani Zungu, who is joining us today. I suspect from Gauteng, if I'm not mistaken. So Bongani, you're welcome to sharing your presentation. Thank you.
Good evening, all, and I am indeed joining you from Gauteng, and it is an honor and a privilege to be part of this engagement. I'm not going to be long because Omilia has covered most of the things that are in my presentation. So, for the sake of time, I'm just going to mention what is expected from our side or on a contribution point of view. Right. So the requirements for post-retirement medical aid assistance, Omilia has already covered, and the requirements also in terms of age, Omilia has already covered that. So I'm not gonna repeat that one. So what I'm going to focus on this presentation, if you allow me to skip all the slides that Omilia has covered, then I can focus on the three options that we offer pensioners or officials that are going on pension in terms of contribution, just to assist them while the documentation or the process is still underway from the time they capture or they fill in the forms, the retirement forms, and the time the forms reaches GEPF and ourselves as the administrator. So when you're going on retirement, the process starts 6 months before you go on retirement, just to assist you as officials that now are ready to go on pension, that now you have 6 months, and in 6 months' time you'll be going on pension. Therefore, you need to start with the forms or filling in the forms for continuation of membership after retirement. So that is just a one step further on our side as GEMS, just to remind members that they need to start with the process early. Why is it important to start early? We avoid a situation where you are now on pension and you don't have enough money to make full contribution to GEMS, yet you qualify for a subsidy or a post-retirement medical assistance subsidy. So if you start early, it's important and it's crucial, because by the time you go on pension, all your paperwork is sorted and you'll be able to receive the subsidy if everything was received by JIPA and processed in time. So in case we have delayed to submit the forms and you're now going on pension and you haven't received or your subsidy is not approved as yet, you have three options. One option, if you can afford to pay full contribution to your towards your medical aid, then by all means you are welcome to do that until your subsidy is approved. Right? So that's the first option. You pay full contribution until the subsidy is approved. Second option is assumed subsidy. So just to make it clear, on a yearly basis, we receive the directive for post-retirement medical aid assistance in terms of what the subsidy will be for the current year. For instance, this year, from January 2023 to December 2023, this is the directive that we have in terms of subsidy. So for a pensioner member that is on pension and does not have a dependent on the medical aid, the maximum amount you receive is 1,701 Rand, depending on the option that you are in. So if your total contribution, for instance, you are on a barrel that it's lesser than the emerald option, you will be, let's say your contribution is 1,701 Rand, that means you will get 75% of your total contribution. So yeah, 75% of your total contribution. But let's say your total contribution is 4,000 Rand. I'm just making an example. Obviously, with that one, you will get the full amount of 1,701 Rand. Right. And again, if you have a dependent, so now it's you and your spouse on a medical aid, and your total contribution is more than and your total contribution, let's say maybe for an instance, your total contribution is about 6,000 rand. So the total amount you will receive is 3,402 rand because it's you and your dependent. But let's say your total contribution for you and your spouse is 3,402 rand. Then you will receive a 75% of 3,402 rands. So that's how the subsidy is calculated, because we find an instance where members will downgrade to a cheaper option, hoping to get the full amount that is the full subsidy amount. So when we say, no, you're not getting the full subsidy amount, but you'll be getting the 75% of the total contribution, and then our pensioner members don't seem to understand that part. So that's why I'm making this example, so that we are all clear as to what I'm trying to say. Right. Then in terms of subsidy, there is a point that we need to take into account here. GEMS as a medical aid does not determine the subsidy. It does not determine the subsidy, but the employer, the DPSA is determining the subsidy, and we will only implement what DPSA say our pensioner members should receive in terms of the subsidy based on their family size. Right. So that's the second option. The third option that our pensioners get while they're waiting for subsidy to be approved is you don't pay at all for a period of 3 months. Let me just go to that slide quickly. Just go back to that slide. Sorry. So the third option, you don't pay or you don't contribute towards the medical aid for a period of 3 months. However, when the 3 months, when you reach the third month of not paying your contribution, you are expected to pay the total amount that is outstanding in full. And if you are unable to pay that amount, your medical aid will be suspended on the basis that it is outstanding for 3 months. Remember why we're granting the 3 months grace period or not paying at all? It's because we assume that you have started early with the continuation of membership process. Then within 3 months after the retirement, your subsidy should be approved. So if your subsidy is not approved, then you will be expected to pay those areas. But if the subsidy is approved within that 3 months, then we will allocate the areas to JIPA and start the claiming process of those areas from JIPA, and we will then allocate the member share or the amount that you were supposed to pay for the 3 months. Then you will pay your areas. Then your medical aid will continue as normal, uninterrupted, because all the monies will be paid. Same thing applies with option 2, where we offer you an assumed subsidy. I've just shown the subsidy. If you have one member, 1,001 rand. So if we assume that your family size is 1 and your subsidy will be this amount, we will allocate to the amount or the assumed subsidy amount, and then we exclude the amount that should be paid by JIPA, and then you pay only your member share. Let me make an example. Let's say your total contribution is 5,000 rand, right? Your total contribution is 5,000 rand. Now you select an assumed subsidy. That means, we just make this one. Sorry, I don't have the calculator here. Just a moment. I just want to make this as clear as possible, because we're having a lot of questions as far as the subsidy is concerned. Let's say your total contribution is 5,000 rand, and you choose the option 2, that you want to pay your member share and you don't want to pay the subsidy for the period of 3 months. So let's minus now, and it's you alone, you don't have a dependent. Now let's minus 1,701 rand. Then the 3,299 rand will be your member share. So that's what you will be paying for the next 3 months, hoping that subsidy will be approved within 3 months. So if the subsidy is approved, then you won't be owing anything because you would have paid your membership for the time you're waiting for the subsidy. Then once we receive the approval of the subsidy, we allocate the areas to JIPA. We start the claiming process on your behalf. We claim the money and your medical aid will not be interrupted. But if the subsidy delays further than 3 months that we have granted you as a grace period, you will be expected to pay the areas that were allocated to JIPA for those grace period months. And if the payment is not received, then your medical aid will be suspended until such time where we receive the areas. So this tells me that I need to emphasize the importance of starting the process early so that by the time you go on pension, the process is complete and you have been allocated your subsidy. Then you will not have any issues as far as the subsidy is concerned. So I've skipped all the slides because Omilia has covered those slides, but only this part I felt it's important that I touch on so that you understand what happens as far as the contribution is concerned on our side. So that will be the end of my presentation. Thank you.
Thanks very much, Bongani. I think you've given a fair amount of comfort to those who are wanting to retire, especially in terms of that 3-month grace period and the options linked to that. It's something that has always concerned our retirees, that they will not have the funds to cover both the member and the employer portions. So with that, we are now moving into the question and answer session of this information session this afternoon. Bongani, there are some medical aid related questions on the chat. If I could ask you to perhaps weigh into those questions, please. Carmen, please can I ask you to open up the mics and we'll take the first round of questions.
It's the games
Okay.
Let's celebrate, scream, and scrum to show that we are stronger together. Celebrate. Get your picture. Scream with the voice of the nation game.
Sorry, Carmen, I see we have NM Guest who's got...
What are you waiting for? Play and win big.
Thank you, NM Guest. Please can we take a round of questions? You can raise your hands and then unmute. Do you have any questions for Amelia from the GPF, or Lesejo from Metropolitan, or Bongani from GEMS? I see a hand. Natalie, you want to share something from the chat?
Yes, thank you, Devi. Good afternoon, colleagues. I just noted a few questions, Devi. There was a question from Ms. Rosa Porter. She asked if she retires with less than 10 years service, will she only receive a lump sum and will she only get her portion? So maybe if Amelia can respond to that question, please.
Thank you, Natalie.
Thank you, Natalie. When you retire with less than 10 pensionable years, you will be entitled to a lump sum payment only, which we call the actuarial value. So it is just a lump sum payment that will be paid upon exit.
So just a follow-up, Amelia, that would then mean it is equal to a resignation.
That's correct.
And unless, of course, you have combined number of years of service in the public service, you will then be entitled to medical aid?
That is 100% correct, David.
Thank you. We have another hand. Ms. Gail Arends, you may pose your question, Ms. Arends.
Good afternoon, everyone, and thank you very much for taking my hand. I have two questions. The one is regarding the payout of the leave, the annual leave. I heard before that one doesn't have, what was the previous word you used? I forgot that other word, but I know the one is for the one leave, but what is the other leave that you were talking about? Is that still paid, and what does it mean? And how are the leave days calculated? If I get 30 for the year and I don't use anything, does that mean that will be paid out? That's my question. The other one is, I went onto the GEPF site and I have seen a lump sum that will be paid out. Is that the amount that I will be getting? Thank you.
Thanks, Ms. Arons. We're going to just take Mr. Sitela, and then I will route the questions. Sarinda?
Thank you, Devi. Good afternoon, everybody, or good evening, depending on what time it is. A quick question. It's a simple question. I'm not sure if I got the explanation right. I hear as the number of service can be bought on the pension side. Does the same apply to GEMS years of, or if you're under 15 years of service? Can that be bought? Or I heard there's an accumulation of service, irrespective of whether you were permanent or whether there was a break of service, an accumulation of service, if that equates or totals 15 years. Can it be bought like it can on the GEPF side? Thank you. I'll listen.
Nice question. Thank you to both Ms. Arons and to Mr. Sitela. I'm going to route these questions first to Omelia regarding the lump sum payout that was calculated on the JEPA website. And the last question, which is, if I buy back service, will this then add to the number of years that I can add to my medical aid and then be eligible? Omelia?
Okay, the first question with regards to the benefit statement on the GEPF app, please keep in mind the benefit statements that is generated gives 4 calculations. So the lady did not clearly indicated which benefit she was referring to. If it was the retirement benefit, if you are less, say for instance, you are 55 years old now and you generated a benefit statement or you requested a benefit statement, the retirement benefit in specific will be calculated up until the age of 60. So if you are 60 years old already, so you are 60 years old today and you requested for a benefit statement, that calculation will automatically be up until the age of 65. Remember, all calculations are estimations. Okay, it cannot be cast or stone because the future calculations will be calculated on today's salary scale and will not take in consideration any increases for the future. I hope I've answered the first question for Mrs. Gail Arens. And then the second question with regards to purchase of service. Purchase of service is only to enhance your pensionable service for when the GEPF do your calculation, because that is one of the determining factors when we do the calculation. When you buy service years, even if you buy 50 years, it will not influence your government years, because government years is the qualifying criteria for the medical subsidy and not pensionable years. So the purchase of service will not increase your government years, because government years is the actual years that you worked for government, whether it was on contract or whether it was permanent, as long as you worked for government. So that is the difference between actual years worked, which is pensionable years, and the government years is the years that you worked, and purchase of service will not enhance your government years.
Thanks, Amelia. Nat, can you perhaps take Ms. Arend's question? I think she was referring to the pro rata leave if you're a public servant and you're entitled to, if you've got more than 10 years service, you're entitled to 30 years of annual leave. But if you leave in July, that kind of pro rata leave that will be paid out. And then the capped leave, the difference between those two. Please, Nat.
Thank you, Devi. Okay, maybe just for the benefit of some of our members, I should just say that that would just only be office-based. It's not for educators. Educators would obviously only have capped credits. If there are any that they have capped credits, though, that will be audited and paid out to them. So to answer Ms. Arden's question is that if you are office-based educator or public servant and you have capped credits, there is a calculation, I don't have it offhand, but there is a calculation that we can probably make available to you if you'll be able to calculate it, but that is normally a finance task. And then those credits will be paid out to you, and then your current credits, your leave works in cycles. So you have a 12-month cycle, which starts at the beginning of every year, and it ends at the end of the year. But the DPSA gives you permission to take another 6 months. So in other words, in effect, you can utilize your current leave credits over an 18-month cycle. That means you need to, by June of the next year, you need to have utilized your credits. If you didn't, it would fall away. So when you're calculating, when somebody exits, you have to look at the previous cycle and you have to look at the current cycle, and you have to then look at the pro rata, as Devi mentioned. And you will then from there determine. It's difficult to answer it here because you actually have to have actual dates to explain it completely, but it's just the pro rata portions that will then be paid out to the member. I don't know if that answers Ms. Arend's question, but yeah, that is how the leave credits are paid out for office-based staff. As I mentioned, educators only would, if they have capped credits, that is the only leave credits that will be paid out to them.
Thanks, Natalie. I think you've answered that fully. We are taking another round of questions. We have Mr. Martin Salis. Sir, you can unmute. Mr. Salis? Do you have a question for us, sir? Mr. Salis? Okay, so Mr. Salis may be having some technical difficulties. We move on to Liz. Liz, you can go.
Control Shift.
We can hear you, Liz.
Good afternoon. I'd just like to know, I was employed as in a governing body position around 1994 for about 5 years. And I am now, then I had a 22-year break in teaching, and I'm back now for 3 years, and I only started my permanent employment now on the 1st of October. That leaves me with 10 years to qualify for the pension. But I would like to know, would that first 5 years that I taught also contribute towards qualifying for GEMS? And how do I prove that I worked those years? Because at this stage, I only have a testimonial from the school that I can prove that I worked those years. Thank you.
Thanks, Liz. Amelia, do you want to take that one?
Yes, thank you, Devi. I will definitely take it. Unfortunately, governing body positions is not seen as government positions. Okay, so a governing body is not, you will not be employed by WCED, but you will be employed by the school. So that will not count for the medical subsidy years, for pension, for the governing for government service years.
Thanks, Amelia. Mr. Solis, are you still wanting to pose a question? I see your hand is up. You are unmuted, sir. You may speak. Okay, we still can't hear you, Mr. Solis. You can maybe pose your question in the chat and we will answer it. Liz, before I move on, did Amelia answer your question to your satisfaction? Because I see your hand is still up.
Oh, sorry. Yes, thank you very much.
Pleasure, Liz. Any other questions? We still have a few minutes.
Devi, we have questions in the chat.
Yes.
There was a question from Marinda, and she said that she belongs to MediHelp, so she's not a GEMS member, so she wanted to know about the subsidy when you retire. Maybe Bongani can respond to that question, please.
I think Bongani has left the building, but we will. Amelia, do you want to perhaps take that? Or can you take that?
Yes,
Thank you.
We do pay subsidies, even if you don't belong to GEMS. So the DPSA speaks, first of all, we must know where the money comes from. It comes from the state kitty. Okay, Treasury gives the subsidy. So they decide which amount will be paid. So GEMS is easy, it's there. Okay, when it comes to outside medical aid schemes, then the DPSA say we will pay up to 4/6 of the amount that your full premium is. So 4/6 will be the cutoff. So if I have to do a calculation, your premium is 10,000 Rand, we will pay 4/6 of the 10,000 Rand. Okay. So yes, we do pay other medical aid schemes as well, but not the same as it is determined for GEMS.
Okay, thank you.
David, then
Yes,
we have
ma'am.
a question from Leslie Hutchings. Asked, once we submit our document to WCD, will we be allocated an HRP, I'm assuming it's a human resource practitioner, from service benefits for support, and will the HRP communicate progress and status? So just so to explain to all the colleagues, we are 8 multifunctional teams that are divided into the different districts in which people work. So once you've submitted your documents, you can then contact the deputy director of that particular district. Our information is available on the PMPS system, and you can then contact us, and we will then connect you to the person that is working with your documents, and you'll be able to then deal with that person. I hope that answers that question. I answered a question earlier. It was a question about the GPF says that you can submit your document 6 months prior, and we say 3. So I said to the person that I answered that the reason why we say 3 months is because we have internal processes, and people would think it's delaying the process, but 3 months is better for us, so that we can ensure that when we hand over the documents or submit the documents to the GPF, that the documents are not stale. Because if the documents are stale, they will reject your pension, and it will just make the process go a bit longer. So I'm hoping that was an unknown user. I hope it answers that person's question.
Thanks, Nat. I'm just going to take some of the guests' questions.
Okay.
I'm hoping Mr. Solis is on and he is audible now. Martin Solis? No. Okay. Melanie de Mink, you can go, ma'am. Ms. de Mink? You can unmute. We cannot hear you. Okay. Liz, do you have another question?
Yes, please. I'd like to know, up on a retirement of 65, I will be then about 1.5 years short to qualify for GEMS. Is there any way to make that 1.5 years or that period up?
From my little knowledge, no. Liz, I don't think so. You cannot buy that service.
Okay, thank you.
Okay. Ms. or Mr. De Donker? Mr. De Donker? Martin? Any one of you, please, who have your hands up? Martin, Melanie, De Donker, Mr. Siegfried van Jaarsveld?
Ms. Pillay, I noted here, or I saw in the chat that Mr. Salis did put his request in writing, but he did indicate that it seems like there's a technical difficulty and some reason is people cannot hear him. But his question was, I'd like to know if I resign at 51 years with uninterrupted service, is there any possibility of me continuing my GEMS membership, or what are my options? That was the question popped in the chat by Mr. Salis. Thank you, ma'am.
Thank you, Sihi. Amelia, do you want to take that?
Okay, from the GEPF side, we will only be liable to pay a lump sum, and upon resignation, you cut all ties with the GEPF, so we will not pay a subsidy. Whether the person wants to continue with GEMS, that is something he should ask GEMS, but I doubt it that a person that is no longer in service of government or a pensioner of government can continue with GEMS, because it is for government employees, the medical aid.
Thanks, Amelia. Before we go to the next person, please note that the link for the evaluation has been posted on the chat. Please can I ask you to share your thoughts with us by clicking on that link and evaluating the session before you leave. Let's hear from Mr. De Donker, who has his hand up. Sir, you are muted. Melanie de Mink, do you want to try again, Melanie? Ms. de Mink, do you want to unmute? Sorry, I can't unmute you on my side. Okay. Ms. Intombezana, if you can mute unless you have a question. Okay. Is there Blau, who's a guest? Do you want to ask a question, Blau?
Yes, I'd like to ask a question. Can you hear me?
Yes, go for it.
I'm 48 years old, but I got 15 years service. And if I should decide to resign, do I qualify for pension? Thank you.
Thanks, Blau. Amelia, that's a quick answer there.
Okay. When you resign on age 48, you will get a lump sum payment only, no monthly pension.
Thanks, Amelia. Let's try again with Mr. or Ms. De Donker and Melanie.
Okay. Can I pose my question?
Yes, please.
I just wanted to know, how do you prove, is the onus on me to prove that I belong to, or that I have 15 years service with government to qualify for GEMS or with retirement? Thank you.
Thanks, Mr. Dodonker. Amelia?
Right. The form that needs to be completed is called the Z583. On the form, you have to complete all your services, whether it's bits and pieces. Normally, you will have, or the employee will be in possession of service records, which can be obtained from Purcell, or there is, if it's from the older generation, there will be service certificates that can be attached to the application. So yes, it must be able to be proven in order to apply for the subsidy.
Thanks, Amelia. Seems there are no other questions. We still have about 189 participants in the house. So once again, please can you click on the evaluation link and complete that for us quickly before you leave. If there are no other questions, I am going to close this session. It is now 6:02, and I see a hand. Shall we be very kind and take Mr. Julius Williams's question first before we close? Mr. Williams?
Good afternoon. Can you hear me?
We can.
Good afternoon. I would just like to know what is the process if you do qualify for to retire with ill health and you're over 55. What is that process? Maybe you're 56. Will you get your full benefit as up to 60?
Nat, do you want to take that?
Sorry, Devi, I was busy answering in the chat. I never heard the question. If the gentleman can repeat it, I will try to answer.
Okay. Mr. Williams has indicated that at 55, he is ill health. If he is ill health retired, what does that mean for his pension? Is that correct, Mr. Williams?
Yes.
Okay, Nat?
Well, Devi, I think that's a question that Amelia can answer. I can answer in terms of James. He would have contributed for 10 years, so that means he would be able to still be a member of James. But in terms of his pension, maybe Amelia can answer him on that.
Okay. Okay, I will gladly answer that. I think the gentleman asked what is the process, first of all. So it's a two-legged question. What happens with the benefits or the payments of the GEPF for disability or ill health retirement? The rules of the fund determine that if you already have 10 pensionable years, irrespective of your age, the smallest of three things will be added to your pensionable service. Number one, 5 years. Number two, the unexpired period. And the unexpired period is basically your current age. Say it's 56, I think the gentleman said 56. Then we say 60 minus 56, which means is 4. So now we say the smallest of 5, your unexpired years is 4. And then the very last one is 1/3 of your pensionable service years. So our system will add the smallest of the three that I just mentioned and add it to your actual pensionable years. Now, say, for instance, the 3 or the 4 is the smallest, which is the unexpired period, and you already had 15 years upon ill health. Then we will take the 15 years, we will add the 3 years, and then we will pay you out for 18 years. Your actual years plus the unexpired years. So you will get, in other words, you will get an enhanced pension based on your type of exit. I hope that answered your question of the benefits of the GEPF. The internal process to apply for your actual medical ill health, that lies with WCED.
Thanks, Amelia. Just a very quick one from the chat, Amelia. When you're buying back service, is it only a payment by lump sum? Or can you do it on a monthly basis is the question on the chat. And I think you did answer that where you said You can opt for paying it off monthly, or you can opt for lump sum. Would that be correct?
That is correct, but we have to confirm that the repayment period over a monthly period, it's the longest period is 180 months, which is 15 years. If there is an outstanding balance upon retirement, we will deduct the balance from your gratuity.
Thanks so much, Amelia. Ladies and gentlemen, there are many questions in the chat that we have not answered. What we are going to do is we will capture that in a frequently asked questions sheet, and we will post that on the service benefits website. Obviously, with all of the questions that haven't been answered together, the ones that have been answered. So those who have also not been on the session will benefit from it. So with that, thank you all very much for attending, and I want to wish you all the very best for the rest of the evening. Thank you and goodbye.